Hello guys, welcome to today's analysis. So today we are going to look at Stanbic IBTC Holdings Plc, their 2025 full year audited results. So just like you normally do, in order to get a sense of what it looks like, you need to overlay the results with 2024 in comparison. So we're gonna do it. So all the data now, for the record purpose, all the data, the graphics is now being uploaded in our S page. So we are pulling it out there. So if you want to get the data to download it out, you go to our X page. This is the handle. This is the handle. Apex _ double _ invest. This is our S page. You give us a follow there and to get the data and other marketing insights which you can tag along and follow very fast, which I expect you to do. So this is it. So the first thing first is this is their results. So this is the graphical representation of their results. So let's dive into their income statement first. After that, we'll come back and interpret the graphics and stuff like that. So for their income statement, hold on a sec. Okay, so for the income statement, so this is obviously, let's start with the revenue. So the total revenue grew by 37.6%. That is, revenue grew from 646.2 billion in 2024 to a tune of 889.3 billion in 2025. That means their revenue grew over something better, which is impressive. The other thing to point out here is these are some of the revenues. If you look at the core revenues, just like banks, just like if you watch our previous analysis when we analyze custodian. So the core business of an insurance, which we explained then, is you have to look at their underwriting before looking at the investment. And so in bank, you have to look at the interest income and non-interest income. So these are the two major earning buckets of a bank: interest income and non-interest income. So especially the interest income of a bank is the most important part. That is where the difference in their loan and stuff like that. We are going to get to that. So for the net interest income grew by 42.5%, which is very impressive, from 410.5 billion in 2024 now to 585 billion in 2025. So that is impressive. Now, for the non-interest income grew by 29%. So non-interest income also grew by 29%, which is very, very impressive. So there is growth in interest income, there is growth in non-interest income. Then the bank also recorded an FX gain. They booked an FX gain because of the devaluation of currency that happened in Nigeria. So this is their first time of booking it. So they booked an FX gain of 77 billion, which is an outlier, a one-off something. So it's entered. So it's part of the revenue for 2025. Then for the expenses, they made a provision for loan. So they made a provision in 2024 already. They made a provision of 81.2 for that impairment, loan impairment. Now, the provision dropped in 2025 by 87.8%. That means they went from making a provision of 8.2 billion, 81 0.2 billion now to 9.9 billion. So that means on paper their recovery mechanism is either getting better or stuff. Remember, impairment when it is made doesn't really mean that the loan has gone bad. It's a provision. So chances are that you recover. Just like if you see their results of 2021, they booked some gain in impairment at a time. Then expenses. So their non-interest expenses is actually growing. So that means running the business expenses grew by 34.8%. If you overlay these expenses with the revenue, you see that they are close, just that revenue is outpacing it. So put an eye on that. Then where they have huge expenses are in, their staff cost is valuing to 30.2%. Their sales, general administration and stuff like that is also growing by 28%. Then depreciation grew by 39.6%. So they booked made a depreciation of 25 billion and stuff like that. So put your eye on that. Then their tax also increased. If you watch their pre-income tax, that's before tax, income was at 551.8 billion. That means income grew by 81.6%. But after tax, they are now booking a final net income of 376.5 billion in 2025 as against 221.6 billion in 2024. So overall, the net income of the bank grew by 69.9%. So pretty decent. So let's look at the balance sheet. So for the balance sheet, the assets of the bank grew by 20 over total assets of the bank. The books grew by 24.7%. That currently the bank went from 6.9 trillion in 2024 to now the assets of the bank is now at 8.6 trillion. Then if you look at their loan books is massively growing to the loans and advances they are making. Look at their cash, look at their investment book also growing. Then you look at their liabilities. Their liability is also growing as their assets is growing. If you look at their total liability, it grew by 20.1%. Then from 6.2 trillion to roughly 7.5 trillion. So look at their deposit book, which is very important. The deposit is also growing by roughly by 19.5%. Deposits grew from 4.3 trillion to now 5.2 trillion, which is very impressive. If you break it down, you see the customers' deposits increasing by 38.4%, which is very impressive. Over 4.5 trillion in deposits in 2025. Very impressive. Then you look at their total equity. So the total equity also grew very well. Total equity grew from over 67.6%. The bank went from 670.6 billion in total equity to over 1.1 trillion. This is impressive. So you see that equity grew, total assets grew alongside the liability. So you can get a snapshot of what it looks like. So this is the graphical representation of the income statement. You look at total revenue here, net income, then earnings per share grew massively by 38.5%. Then dividend also grew by 34.5%. So this is the overlay. You can see 2024 in this column, 2024 in this column. You see that revenue grew, non-interest expenses grew, and the net income also grew. So everything on the growth side. Then if you look at the balance sheet graphically, you can also see growing by total assets of over this, revenue, liability, equity, and the loan advances. These are the graphical representations. So let's look at the matrix. Let's look at the matrix, the key matrix. Loading is loading. So for the key matrix, okay guys, okay, these are the key metrics. So if you look at their cost to income ratio, it is pretty decent. You look at their net profit margin, over 42%. You look at their loan provision. Loan loss provision, decent also. You can overlay it, and their return on revenue, decent. Their cost of fund also somehow over 25.6. Then you can also look at other metrics which are just decent ratios. Yeah. Then look at their loan to deposits. So they make details here which you are supposed to go and read. You see the kind of they are making a wholesale loan. It was pointed out in this detailed analysis, which you are going to go back and read the details here, and all of them are there. Then you look at their financial leverage. Still where even it went down, some their financial leverage, which is weighing the equity side of the business and the total revenue, total assets. So it's dropped from 10x to 7x, which is pretty decent. And one of the things that led that is the capitalization, bank recapitalization that CBN told them to do. So they injected more pay-in capital. So it helped. So it was also explained here. Then you look at their return on ROA, that's return on assets, pretty decent. Then their return on revenue, pretty decent. So pretty decent. So some of the concerns are mentioned there. So because of time, you go out and read. Their fees and commission franchise is making a killing. The insurance arm of the business, which is just explained, the insurance arm of the business is bleeding. It has been bleeding for a very long time. Okay, from its onset, at least from 2021 data to date, is still bleeding. That means under the insurance arm, the business is paying more claims than the premium they are collecting. So the insurance underwriting business is totally broken. But the other side of the business is making up for it. If you look at their asset management side, fees and commission, it's pretty nice. So this is it about it. So go read it up, everything here, of full breakdown of it. So that's it about Stanbic. See you in the next one. Peace.